Welcome back to our channel. Today, we're diving deep into the financials of CleanSpark, a company making waves in the energy sector. Curious about where their stock might be headed? Stick around to find out. CleanSpark, trading under the ticker symbol SK, has had quite the financial journey over the past few years. Let's break it down year by year. For the period ending September 30th, 2019, CleanSpark reported a total revenue of $4,533,000. Their cost of revenue stood at $3,861,000, leaving them with a gross profit of just $672,000. After accounting for operating expenses, they reported a net income applicable to common shareholders of -$26,117,000. Moving to September 30th, 2020, their total revenue saw a significant jump to $10,029,000. However, their net income applicable to common shareholders was still in the negative, standing at -$23,346,000. For September 30th, 2021, CleanSpark's total revenue skyrocketed to $39,287,000. This growth is impressive, but they still reported a net loss, with the net income applicable to common shareholders at -$21,990,000. And most recently, for September 30th, 2022, the company's total revenue reached a whopping $131,524,000. But here's the catch: their net income applicable to common shareholders was -$57,662,000. Now, what does all this mean for the stock's value? The increasing revenue shows that CleanSpark is expanding its operations and market reach. However, the consistent net losses might raise eyebrows for potential investors. It's essential to consider the company's growth strategy, investments, and future plans when evaluating these numbers. Having looked at CleanSpark's income statement, let's now delve into their balance sheet to get a clearer picture of their financial health. Current assets. From 2019 to 2022, CleanSpark's total current assets have seen a significant increase. In 2019, they stood at $9,884,000, and by 2022, they had grown to a whopping $50,776,000. A notable contributor to this growth is the substantial increase in other current assets, which went from $1,267,000 in 2019 to $26,504,000 in 2022. However, their cash and cash equivalents saw a slight dip in 2022, standing at $26,374,000, compared to $27,852,000 in 2021. Long-term assets. The most striking observation here is the massive jump in fixed assets. From a mere $145,000 in 2019, they skyrocketed to $378,877,000 in 2022. This could indicate significant investments in infrastructure or acquisitions of physical assets, signaling a potential expansion strategy. Current liabilities. CleanSpark's total current liabilities have also grown over the years, from $1,503,000 in 2019 to $34,041,000 in 2022. The accounts payable saw a significant increase in 2022, reaching $24,683,000, up from $6,983,000 in 2021. Long-term debt. While the company had a long-term debt of $3,046,000 in 2019, it reduced to $458,000 in 2021, but then saw a substantial increase to $13,613,000 in 2022. This could indicate that the company is leveraging debt to finance its growth strategies. Stockholders' equity. The total equity of the company has seen a consistent rise, indicating a strengthening financial position. From $18,885,000 in 2019, it reached an impressive $404,012,000 in 2022. However, it's essential to note the increase in treasury stock, which went from $111,936,000 in 2019 to a staggering $599,898,000 in 2022. In summary, CleanSpark's balance sheet reflects a company in growth mode, with significant investments in assets. However, the rise in liabilities, especially long-term debt, suggests that they are financing their growth through a mix of equity and debt. After examining CleanSpark's balance sheet, let's now shift our focus to their cash flow statement, which provides insights into the company's liquidity and its ability to operate and expand. Net income. Starting with the net income, we see a concerning trend. CleanSpark reported a net loss of $-26,117,000 in 2019, which deepened to $-57,326,000 by 2022. This indicates that the company's expenses have outpaced its revenues, leading to increasing losses over the years. Operating activities. Despite the net loss, the cash flow from operating activities tells a slightly different story. In 2019, the company had a negative cash flow of $-5,698,000 from its operations. However, by 2022, this had turned positive, with a cash inflow of $71,444,000. This positive turnaround can be attributed to significant net income adjustments, amounting to $73,140,000 in 2022, and a substantial depreciation expense of $49,091,000. However, it's worth noting that there were negative changes in accounts receivable and other operating activities, which slightly offset these gains. Investing activities. CleanSpark seems to be heavily investing in its growth. The net cash outflow from investing activities has been increasing, from $-674,000 in 2019 to a significant $-210,982,000 in 2022. The primary driver behind this outflow is the other investing activities category, which saw a massive outflow of $-191,705,000 in 2022. This could indicate major investments in acquisitions or other strategic assets. Financing activities. The company has been actively raising capital, evident from the positive cash flows from financing activities. In 2019, they had a net cash inflow of $13,798,000, which surged to $141,960,000 by 2022. The sale and purchase of stock contributed a significant $125,865,000 in 2022, indicating that the company might have issued new shares to raise capital. Net cash flow. Despite the challenges, CleanSpark's net cash flow has remained positive. From a net cash inflow of $7,426,000 in 2019, it stood at $2,422,000 in 2022. While this is a decrease, it's commendable that the company has managed to maintain a positive cash flow amidst its aggressive investment strategy. In summary, CleanSpark's cash flow statement reveals a company that's actively investing in its future, possibly at the cost of short-term profitability. The positive cash flow from operating activities is a silver lining, indicating that the core operations are generating cash. However, the increasing net losses and heavy investments suggest that the company is in a growth phase, which often comes with associated risks. That wraps up our comprehensive analysis of CleanSpark's financial